In this chart, I apply a special Fibonacci to this trend and place a sell order. Let's see what happens. And here again, I apply the same Fibonacci to this trend and place a buy order. Just watch what happens. You might be wondering, how am I doing this? Well, I have to tell you, this is my personal price action strategy using Fibonacci Retracement that I have decided to share it for free. You can use it on pretty much any chart and any market, Bitcoin, Ethereum, or gold, doesn't matter. And from what I've tested, it can be applied in almost all the time frames from 1 minute to daily. This price action setup is called false base Fibonacci. I'm gonna show you how it works, and also at the end, I'm gonna test it on Bitcoin so you can check its historical performance. The very first step is, of course, bringing up the Fibonacci, so go to the Tools section on your TradingView and pick Fibonacci Retracement. Click on your chart and drag it all the way down and to the right, that's all it takes. The default version looks a bit off, so let's change some values. Double-click on the Fibonacci. Uncheck every level except 0, 1, and 0.618. Then add -0.27, 1.27, 1.618, and finally -0.618. The rest of the changes are completely optional, but you can follow my steps if you want it to look exactly like mine. And finally, this is the Fibonacci retracement we're going to use to create a pure price action setup. First of all, let's see what the core idea is and how we can use it in order to get potential short opportunities. A false base Fibonacci bearish setup looks something like this. See, a normal uptrend usually consists of a few rallies and a few bases, or the correction to those rallies. Each base creates a support zone, which sets the stage for the next rally, pushing the candles to higher levels. But sometimes something different happens. As the candles are pushing higher, suddenly they move down and drop below that support zone. It might be a clear breakout, or it could simply create a slight lower low. Either way, this wave actually changes the market structure, and from price action point of view, many traders out there may start thinking a brand new downtrend is just beginning. Then something unexpected happens. Candles start moving above the base support once again and form a new higher high. So many traders get confused because the market structure is sending mixed signals. And this is exactly why I call such a support a false base. Once that higher high is formed, there could be a possible short opportunity if a few conditions can align together. Let me set an example on the chart. You can clearly see an uptrend, consisting of 2 rallies and 1 base. The base acts as a support zone for the candles and helps push the market higher. Then candles start moving down and close below the base support zone. Notice how the shadow is clearly below the previous low, so some traders would expect that candles are going to break down completely. However, the market does the opposite. A few strong bullish candles appear and push the price to a new higher high. So this confusing structure makes me imagine that this support is actually a false base. Now it is time to apply our Fibonacci to look for potential short opportunities. The first click of Fibonacci should be at the beginning of the corrective wave that eventually created the lower low. The second click of Fibonacci should be placed exactly on the ending point of that lower low or the breakout. One extremely important detail is that the end of the lower low, which is the second click, must be exactly on -0.618 level and not 0 like in traditional Fibonacci methods. As for the entries, the area between 1.27 and 1.618 could be a potential entry zone if candles get rejected from that area, and in this example, you can see a strong rejection from 1.618 level, and that long shadow implies that buyers may be losing momentum, so the trend might be running out of steam. Because of that, I can start looking for a possible short position. The lowest level of Fibonacci, which is minus 0.618, could be a potential target in this setup. As you can see, in this specific example, the setup played exactly as expected. The cool thing is that there's a possibility candles could even move lower, completely shifting the market direction. So now, let's talk about the bullish version of the setup and how we can potentially spot long opportunities after a strong downward dump. The bullish false base Fibonacci is the same as the bearish one, but in reverse. A downtrend is made up of a few dumps and bases, or correction to those dumps. During this downtrend, each base forms a resistance zone, which sets the stage for the next downward move and rejects any reversal to the upside. Candles start going down, and suddenly they move sharply to the upside and break above the resistance. This penetration is sometimes a clean breakout or just a slight higher high. Either way, the market structure changes, and normally many price action traders immediately begin looking for long opportunities because they think a reversal has already started. But not always. In this case, candles start moving sharply down below the resistance and form a new lower low. This creates a huge confusion because most price action traders cannot interpret what's going to happen next. But when you come to me, I will say that this resistance zone was actually a false base. So at the end of that lower low, if our Fibonacci conditions are met, we can start looking for that possible long opportunity towards the false base resistance or even higher levels. Let me show you an example. As you can see in this chart, there was a strong downtrend made up of a few dumps and bases. I can identify the base with a box, which would be the resistance zone in this chart. Everything looks completely normal until the candles start pushing up towards the resistance zone, and suddenly there is a slight breakout, which is actually a higher high. As I explained earlier, so many traders would start considering possible long opportunities from the price action point of view. However, that is not always the right conclusion, because in this scenario, after a few other retests of the zone, the candles start falling down sharply and score a lower low. And by this lower low, while most traders get confused, I can imagine there is a possibility of a Fibonacci setup, because this resistance zone seems to be a false base. The first click of Fibonacci is from the starting point of the corrective move that created the higher high. And the second click is at the exact end of that higher high, or the breakout. And once I apply the Fibonacci, just like before, the second click or the end of that higher high must be exactly on minus 0.618 level and not 0 like in traditional Fibonacci techniques. About the possible entry, the zone between 1.618 and 1.27 is a possible long area, which means if candles get a sharp rejection, that implies the sellers are exhausted and cannot possibly take the price to lower levels. As you can see here, the candles fall into that zone and touch the 1.618 level. It seems that they cannot go further down, so to me, there is a possibility of a potential long. Now let's analyze Bitcoin chart and check the historical performance of this setup. But before, if you found this setup helpful, go ahead, hit that like button. It really makes me glad knowing my free content is making a difference. And besides, don't forget to join our Telegram community, where I regularly post additional educational content and market analysis. I've left a link for you below in the description. Looking at Bitcoin one-day time frame during the previous bull run. As you can remember, Bitcoin made consistent higher highs, which eventually took the price to 100,000 area. See how the false base Fibonacci could have helped us with the analysis. Near the all-time high, there was a strong support zone, and when candles retreated, there was a breakout from the zone. I thought there is a possibility of this zone being a false base, and I already told my audience that this bull run could be ending in the coming months. let me apply Fibonacci so you can clearly understand the structure. You can see, as the Bitcoin progressed, the final stop was around 127,000, which happened to be rejected from 1.618 level of Fibonacci, not once, but a few times. Historically, this setup produced the expected result in this scenario. From that point on, Bitcoin started a bearish movement towards the minus 0.618 level of Fibonacci and even made it below that level until the market live during the time of recording of this video. As always, I have to say that this video is for educational and informational purposes only and should not be considered financial advice. Trading and investing involve risk. The past performance does not guarantee future results. Always conduct your own research and consult a qualified financial professional before making investment decisions.